Welcome, everyone, and thank you for joining today's detailed market discussion. In this session, we are taking a comprehensive and balanced look at Applied Digital Corporation, APLD, a company that has increasingly drawn attention from market participants who are interested in the evolving intersection between digital asset infrastructure and high-performance computing solutions designed to support artificial intelligence workloads. Over the past 24 hours, APLD has experienced noticeable price volatility, largely reflecting broader movements within the cryptocurrency market, particularly fluctuations in Bitcoin, as well as ongoing developments related to the company's data center expansion initiatives. In recent trading sessions, the stock has approached and tested important resistance levels, signaling that traders and investors are carefully evaluating its near-term direction. A key factor currently influencing trading volume is anticipation surrounding the company's next phase of GPU cloud deployment, which many market observers view as central to its evolving growth narrative. Applied Digital has been gradually repositioning itself from being primarily a hosting provider for cryptocurrency miners to becoming a broader infrastructure platform capable of supporting large-scale computing demands, including the training and operation of large language models, LLMs. This strategic shift toward high-performance computing infrastructure for AI workloads has differentiated the company from more traditional mining-focused peers and may help explain the heightened institutional interest seen in recent quarters. From a technical analysis standpoint, several indicators are being closely monitored by traders. The Relative Strength Index, RSI, has recently hovered in the 58 to 62 range, which generally suggests constructive upward momentum without signaling extreme overbought conditions. This leaves open the possibility of additional upside if buying interest continues. On shorter-term timeframes, analysts have noted a bullish crossover on the Moving Average Convergence Divergence, MACD indicator, on the 4-hour chart, which is often interpreted as a sign of strengthening trend momentum, though it is important to remember that no single indicator guarantees future performance. The stock has also been trading above its 50-day exponential moving average, EMA, a level that many technical traders consider a form of dynamic support. Meanwhile, Bollinger Bands have begun to widen, a development that typically reflects increasing volatility and the potential for a larger directional move. However, volatility can occur in either direction, and prudent risk management remains essential. If the stock maintains support in the general $8.50 to $9 area, some technical analysts identify the prior swing high near $10.50 as a possible area of interest, although outcomes depend on broader market conditions and company-specific news flow. Trading volume trends are also being observed closely, as sustained increases in volume during price pullbacks are sometimes interpreted as signs of accumulation, whereas declining volume during rallies may suggest caution. Still, volume patterns must always be evaluated within a broader analytical framework. Beyond charts and indicators, social sentiment has also played a role in shaping short-term narrative momentum. Discussions about APLD have intensified, with various market commentators highlighting the company's reported $160 million private placement and interpreting it as a signal of strategic confidence from prominent industry participants. Comparisons have been made to companies such as CoreWeave and Equinix, with some commentators suggesting that Applied Digital's enterprise valuation relative to projected high-performance computing capacity could position it competitively within the expanding AI infrastructure landscape. However, such comparisons should be evaluated carefully, as each company operates under different financial structures, customer bases, and risk profiles. Additional discussion has centered on the Ellendale facility, where reports and speculation about progress in power energization timelines have circulated, though investors are encouraged to rely on official company communications for confirmation of operational milestones. At the same time, more cautious voices have pointed to metrics such as the company's debt-to-equity ratio and the capital-intensive nature of building and scaling data center infrastructure, emphasizing that while growth opportunities may exist, financial leverage and execution risk remain important considerations. Overall, prevailing sentiment across social platforms currently appears constructive, with enthusiasm tied to themes like AI infrastructure and digital asset compute services, yet sentiment can shift rapidly and should not replace disciplined analysis. Applied Digital is increasingly being viewed not solely as a cryptocurrency-adjacent stock, but as a broader infrastructure participant positioned within the long-term evolution of computational demand. The convergence of technical momentum signals, strategic business model adjustments toward AI-oriented workloads, and heightened public discourse has contributed to its recent prominence among active traders and long-term investors alike. For shorter-term market participants who actively manage positions, some may consider monitoring pullbacks toward key moving averages as potential areas of interest, while maintaining clearly defined risk parameters and stop-loss levels to help manage downside exposure in the event of broader market volatility. For longer-term investors, the company's projected capacity expansion through 2026-2027 and its ability to secure sustainable customer contracts for high-performance computing services may represent more central factors in evaluating the investment thesis. As always, conducting thorough independent research, reviewing official filings, assessing risk tolerance, and considering overall portfolio diversification are essential steps before making any financial decision. Psychological resistance levels, such as the $10 area, often attract attention in trading communities, and a decisive move above such levels, accompanied by strong volume, could increase short-term momentum, while failure to hold support could lead to consolidation or retracement. Market conditions remain dynamic, and outcomes depend on a wide range of macroeconomic, sector-specific, and company-level variables. Staying disciplined, maintaining balanced expectations, and managing risk carefully are key principles in navigating opportunities like this. Thank you for being part of today's discussion. If you found this breakdown helpful and informative, please make sure to like the video, subscribe to the channel, and stay tuned for more in-depth market analysis and updates.